Good afternoon, everybody. My name is Rafael Matocola. I'm the Investor Relations Manager of WDC. It's a great pleasure to be with you again. I will be intermediating the questions until the end of the presentation. In a few moments, we will be talking about the results of the third quarter of 2021, and I would like to remind you that we published them yesterday after the market closed, and we have also made available the presentation that we will be showing you today via email, and you also have on the Investor Relations website. We have Adelei Rigateri, CEO and founder of WDC, and also André Valente, CFO and Investor Relations Officer. Some quick information. This video conference is being recorded. It will be made available on the Investor Relations website of WDC. The presentation that we will be showing you is also available on the website, and you can access it on the platform on the left control panel. And we do have simultaneous translation into English, and for that, you should access the English link. We do have a chat facility here so that you may send your questions. You may send your questions at any moment in time, and during the presentation, at the end, we are going to read the questions as they arrive. So please identify yourselves, state your name and the company you work for. And lastly, I would like to reinforce some information more on the sense of a disclaimer. The statements that we will be making and that are contained in the document regarding WDC's network, business and growth perspectives, they are based on the expectations of the management, and these expectations depend substantially on market conditions and also the performance of the Brazilian economy and the sector and international markets. Therefore, they are subject to change without prior notice. I would like to thank you very much for your presence. Once again, it's a great pleasure to be with you again. And now I would like to give the floor to Vanderlei, who will start the presentation. We are waiting for the sound to be activated. Please stand by. Please stand by. I apologize. Maybe this is what you hear the most during all the video conferences. Okay, my microphone was muted. Good afternoon. It's a great pleasure once again to be with you, as always, during our earnings conference calls, and this is a very great opportunity for us to tell you a little bit more about WDC. Just to start the presentation, I like to show you a slide with the main highlights of the period, what happened, and basically, there are two things that made us very happy. Once again, record total sales and record net revenue. And especially, we had a recovery in our operating margins. So we exceeded 391 million, 391.8 in fact, 35.7% increase on a year-on-year basis. And I remember that total sales for WDC is a very important indicator because it has to do with the sum of all the gross revenues of everything that we sell added to the total new contracts for rental of TAS. And another important point is that net revenue went up 45.5%, 288 million, and our EBITDA margin was higher than 26.2%. In fact, 1.4 percentage point increase on a quarter-on-quarter comparison. And why do we make this kind of comparison quarter on quarter? Because it's a more comparable revenue mix. Because solar has been reaching much higher levels in our total mix, in the total of the company mix. So you can see that the corporate segment, 196 million in the third quarter, 88.5% higher than the third quarter of 2020. Solar BU, 96 million in this quarter, 346.6% higher on a year-on-year basis, reaching incredible volumes of solar, increasing consistently its market share, and enterprise BU, which together with solar form our corporate segment, reaching over 100 million reais in the third quarter of 21. And with that, we had an increase of 21.2% on a year-on-year comparison. The recovery of our operating margins is shown on the two indicators that you see on the screen. Our consolidated gross margin, 27.6% in the third quarter, vis-à-vis 26.6% in the second quarter of 21. And the EBITDA margin, consolidated EBITDA margin, exceeded 26%, vis-à-vis 24.7% in the second quarter of 21. All that brings about a significant improvement in our operating environment. And I would like to mention three things that happened during this quarter, and that will make a lot of difference in the future. The first one was our partner with Huawei, one of the biggest telecommunications companies in the whole world, and they launched worldwide a new division, and we are the first partners for distribution of Huawei digital power here in Brazil. And the other super important partnership is with Layard. Layard is the biggest manufacturer of LED panels in the world, and this is a segment that has been increasing in the post-pandemic period, especially in outdoor media. And we also launched our own brand, which is Easy4Link, which is a telecommunications product brand that came to support the growth that we have been seeing in some smaller ISPs. On the next slide, I would like to say a few words about our Easy4Link. This is very important because if you think back, we started to plan this brand and these products as soon as we saw that the segment was suffering. The segment was suffering because of the shortage of semiconductors in the market. So in order for us to avoid a disruption in the supply of fiber modems, fiber optics, etc., we established our own specification, and we asked a company in China to start producing the printed circuit boards for us. And this was extremely useful in September when we started to deliver these products to the market. Just to give you an idea, during this period, this brand has already conquered 2.3% of the overall sales. And it is really an incredible joy for us to have our new brand, our private label, because we have control over the specs, the control over the margins. And this brand came in order to mitigate the problem regarding the shortage of semiconductors in the other brand that we see. And also, at the same time, it opens room for us to cater to the small ISPs. And another important thing that happened during this quarter, you can see on the next slide, because we signed a partnership with Huawei And it is very important for you to understand that this is a strategy. This is an extremely aggressive strategy on the part of one of the biggest providers of telecommunications, $130 billion, focused mainly on telecommunication products. And they made the decision to get into what we call zero carbon products. And this is very, very cool, because this is a view on the part of a manufacturer that is present all over the world, that it is not enough to have telecommunications strategy. You have to have clean energy. And some years ago, they already launched the inverters, all the solar energy products. And by that, during this period, they were able to deliver clean energy, over 325 billion kilowatt hours in converters, clean converters. And if you consider the equivalence of that, what they have already delivered had a reduction of 160,000 tons of carbon, 220 million trees planted. This is equivalent to 220 million trees planted. And their strategy is to have a product line you can see on this slide now. They imagine that all the data centers that consume a lot of electric power, both the mini data centers as well as the large data centers. And so they are putting in place this policy of carbon reduction. And this is the strategy on the part of Huawei, which is to design a portfolio of products for the large data centers that are all modular. And in Dubai, we were able to see one of them, and they are finalizing already. They are completing this for a telecommunication company of the Arab Emirates. And the G cycle will consume a lot of mini data centers. I know that you have already heard me talk about that a lot. The data center will be consuming a lot of investment on the part of the operators that will be implementing this. And it would only be fair that these data centers have a clean energy policy, which is a composition of solar panels, inverters that generate energy to the equipment, and lithium batteries, and the storage of this energy. And so this whole strategy will be permeating the whole telecommunications area end to end. And why have they chosen us? And this is rather interesting because WDC is following a path, of course, in different proportions. We started with telecom, fiber optics, EPOM, and infrastructure for telecommunications, and then we got into solar energy. And you can see that there is a very big convergence of these technologies so that they may be used in a telecom environment. And this is why we are so confident that we're following the right path. And according to Huawei, what differentiates WDC from any other player in Brazil is TAS. So they feel the need on the part of operators and on the part of providers in terms of acquiring this kind of infrastructure. And this has everything to do with our own strategy that we drafted way back then. And another significant fact in audiovisual was our recent partnership that we announced recently with Layard. As you can see, they are the biggest manufacturers of LED panels. And they do have a plant here in Brazil, and they will be using their plant for technical support to clients, and they have transferred all the importation of modules and the fabrication and the manufacturing of the product to us, to WDC. So this is another very important leap for us in this segment. And worldwide, this segment is growing at very high rates, and there is a trend that you will be seeing until the micro LED, that is something that will be getting to the people's homes, and the LEDs for outdoor media. And we already had the professional audio and video division, and now we are much more powerful, associating ourselves to the biggest manufacturer of these products in the world. And as you can see, we had these very important leaps, and they will be more and more important for the next few quarters, because we see that the pandemic is already going down, and we already see events being organized, and with a significant increase in the number of sports events and music shows, and they are big consumers of LED panels and also of all the audio and visual products. So it is very gratifying for us, that is to say, all the associations that we are establishing with world leaders. And now going to the next slide. As we said, we broke a record of sales once again in the third quarter of 21. We grew our total sales to 391 million, with an increase of 35.7%. And year to date, compared to last year's year to date, we have exceeded 1 billion and 105 million, with an increase of 56.6% year on year. And the highlight here is the corporate segment, as I said before, because it is exiting the pandemic, and professional audio and video have seen an increase in demand, and this increases our margins because the margins are higher, and this improves our operating result. On the next slide, slide number 9, we see total sales per segment. And you can see, as I said before, that the corporate segment grew by 93.1% year to date from 20 to 21 on the right. 88% of the quarter year on year. And in telecommunications, we saw a significant growth as well, because we went from the year to date of last year, 451 million, going to 614 million year to date, 21. And quarter on quarter, no, not quarter on quarter, but on a quarter, in a yearly comparison, an increase of 6%. In spite of that, we do see a deceleration at the end of this quarter. Telecommunications showing a slower speed of growth, and a little bit slower than we expected. We started analyzing this point, and we went in depth in this analysis, and we see that some providers were afraid of a shortage of semiconductors, and they had already bought in advance. And also in July and August, there was some delay in the delivery of some products, and this also has an impact. But the fact remains that we do not know exactly yet what is the outlook for that. But we did see the slowdown in telecommunications in this quarter. On the next slide, we see the Solar BU total sales. Every month, every quarter, we have record over record. And this week, on the Estado de São Paulo newspaper, there was an article saying that solar energy grew 53% year to date, mainly because of the electricity bills that are becoming increasingly more and more expensive. And in the same period that we saw, practically the same period of this growth of 53%, we grew 520% in our sale of solar energy products in Brazil. So we have been able to ride this wave and gain market share from competitors in this segment of solar energy, coming from our strategy of giving a much stronger technical support to our integrators and having a premium offer. And we made a decision not to work with, we only worked with top of the line panels, solar panels. Only Jinko and Longi are our suppliers, only the best in the world, as well as in inverters. We have Huawei and Solis, who are two world leaders in the segment. Because of all that, we really stand out in terms of the quality of the products that we deliver. And the traditional payback of an implementation of solar energy is around 4.5 years or 5 years. And the products have to last longer. We know that the useful life of a generator is from 20 to 25 years, and we have to assure everybody that we will get that and we will deliver that. And this is why we placed our bet on the best of the market. Here we see the consolidated evolution of our sales. You can see that over the quarters, telecommunication that had a very big participation in the mix of our total sales. I'm not saying that it didn't continue to grow. It did. But as we already knew, we imagined that solar would start to have a much bigger weight in our sales mix gradually. So we closed the quarter with solar being 24.5% of total sales, enterprise BU 25.6%, 25.5%, and telecommunications 50%. And I believe that this figure, when I look at this chart, I am extremely pleased to see that our strategy regarding participating in different markets and the great result obtained from that. And this means that the company is resilient. That is to say, we never place all our eggs in one same basket. And this mix and the visibility that we have of this trend led us to where we are. And we see very clearly now that everything that we planned way back then in January 2020, when we launched the Solar BU, in the first quarter, it was only 2.5% of our total sales. And now it is 24.5%. And this is evidence that the company has the strategy and acts and makes things happen. This is all very significant. I will stop here and I will give the floor to André Valente, our CFO, and he will be telling you about our figures so that you may have an idea of our results. Thank you. André?
Good afternoon, everyone. On the next slide, we're going to share some information about the performance of our TaaS modality, which is technology as a service. This quarter, we started with 409 new rent agreements. And despite the reduction of 4.2% vis-à-vis the same period of the previous year, we show the power and strength of the company in this modality. A positive highlight has to do with the new record of the average ticket, totaling 305,000 reals per agreement on average, growing by 11% vis-à-vis the third quarter of 2020. On the right-hand side, we can see total TAS sales growing from 117 to 124.9, also posting or showing very significant maturity at the company with this modality, which is technology as a service. On the next slide, we can see a comparison also of the company's capex. In the third quarter of 2021, substantially comprised of assets related to new TAS agreements, and here we show a drop of 9.2%, despite the growth shown in TAS sales, which is 6.8, as shown in the previous slide. And here we strengthen our better profitability behind these agreements this quarter. In other words, we increase the sales value despite the capex or lower capex expenditure compared to the past. On the right-hand side, we show you the revenue backlog. As a reminder, the revenue backlog is nothing but the future revenue already contracted based on ongoing TAS agreements at the company, and they will bring results, revenue, and recurring cash to WDC in the future. In this indicator, we can see a robust percentage of growth as well, greater than 55%, reaching 565 million reals, a backlog for the future. On the next slide, here we can see another TAS indicators. At 9 months, we can also see significant growth of 35%, reaching 381 million total VGV, TAS sales, and capex also growing at a very lower rate, only 8.8% compared to the first 9 months of 2020 and 2021. On the right, we can show the markup, the profitability of these contracts with evolution for every real invested in TAS. We used to have 1.70 as sales, and now we evolved for every BRL invested. Now we generate 2.11 reals as revenue. So profitability, average profitability growth is 24%, which is very positive to the company's earnings in the future. On the next slide, here we show a bridge analysis of adjusted EBITDA for the telecom segment. The telecom segment continues to post robust results, 58.5% EBITDA, which is a margin on net revenue of 44%. In this current quarter, this is an improvement in the percentage margin of the company of 2.4 percentage points vis-à-vis the third quarter of 2020. There was a slowdown in the volume growth by the end of the third quarter. However, we maintain our margin performance, even offsetting the negative effects that we showed before in previous occasions. The extension of TAS agreement terms bring here in the telecom segment. On the following slide, we show the same bridge, the same breakdown for the corporate segment. Here we have a historic record of nominal EBITDA in this division, 17 million reals, and we highlight the BU Solar delivering even more than the aggressive growth curve expected, as Vanderlei showed before. This quarter we had 96 million sales in solar, which points to an annualized level of nearly 400 million reals per year in this new solar segment. The BU Enterprise, which is also included in the corporate segment, also showed a very significant resumption after the pandemic, with a return of meetings and also several investments related to people gathering and bringing improvements to the Pro AV segment. On the next slide, here we show some comparisons between the most important result lines of the company. Net income or net revenue, 288 million, a record growing by 45% vis-à-vis the same period of the previous year. Adjusted EBITDA also had a record level of 75.5 million this quarter, delivering a percentage margin over net revenue of 22.6% and adjusted net income. Here we have 25 versus 15, which is very much affected by financial and seasonal effects of the quarter, out of which are broken down on the next slide. On the next slide, the purpose is to share some information on the qualitative analysis of net income. The bridge chart on the right shows FX variance of assets and liabilities denominated in foreign currency. This is the loss versus a gain of 7.4 million in the third quarter of 2020. So the delta brought by foreign exchange variance is 12.4 million. It also had a negative impact of adjustment to net present value used in our receivables related to the increase in Selic rate, which has happened this quarter and which didn't happen in the same period of last year. So there was a negative impact on the company's P&L of 1.7 billion. This adjustment has no cash effect, it's purely an accounting adjustment. And excluding these two effects, which is shown on the purple columns on the right, there is an evolution of net income pointing to a growth of 18.7 in the third quarter of 2020 vis-à-vis 23.4 million in the third quarter of 2021. This shows improved net income of 24.9% quarter on quarter. On the next slide, here we show the evolution of our cash flow. In the first bridge, here we show the variation of balance between the closing of the fourth quarter of 2020 and the third quarter of 2021, the last column on the right. In the bridge at the bottom, a variation of the quarter. I'd like to focus particularly on this bridge, which is the latest information disclosed to market. Here we close the second quarter with 36.6 million cash. Our operational activity generated 38.4 million, and we have new debt funds prior to the capital operation in July of 30 million. We amortized debts of 36.2 million, and we also had a capex of 56.8 million in order to have new TAS agreements up and running. We started with the 409 contracts we started this quarter, and we had 430 million net from the share option or offer that happened in the end of July, and other factors with 5.4 million expenditures, closing the third quarter with 436.9 million reals cash. On the next slide, here we show the company's net debt to EBITDA ratio, closing at 222 million reals. And at the bottom, we show this chart, a timeline of amortization of these debts. And the behavior of the debt, the behavior of future amortization is 29 months. That's the duration. And the approximate average cost of CDI plus 352. So very significant math is coverage of net debt versus the TAS revenue backlog, which is guaranteed cash for the future, considering the low churn rate and delinquency of TAS agreements. Here we show coverage of over 2.5 times our net debt over EBITDA in the backlog. I would like to give the floor back to Vanderlei so he can share the next slide about what's next. Vanderlei, over to you. Vanderlei, you're muted. Now we can hear you. Great, great. Now we can hear you. So that's what I hear the most. You're muted. Okay. So we do have some important things to show you. Things that we can tell about the future. So what's next? The first party news that I consider to be good. Precisely, we already feel signs of improvement when it comes to the supply of semiconductors for 2022. All manufacturers, despite slightly increasing the price of some products and goods that we buy abroad, at least manufacturers are giving signs that the second half of 2022 tends to be regular. So this gives some relief in terms of challenging in the supply level of the semiconductor industry. Another thing that we've already noticed and we can feel now in the quotations for this month is an upward trend, a better trend in the price of international freight. This is getting better. As you know, in latest months, after the pandemic, international freight or container from China to Brazil, which cost an average $2,000, was charged at $16,000 per container. And that brought a huge increase in the cost of products, internal products. So we already feel signs of reduction on behalf of the cost of this freight. Another thing is that we already have a very good pipeline evolving for M&As. As you know, in our investment assumptions and in our IPO, we had in mind a couple of strategic M&As. And right now we are moving forward in these processes. In other words, we have a pipeline for telecom and also for cybersecurity and also in solar energy. So we're working in all these fronts that we consider to be important so we can improve our capacity, our expertise, bring in more people, bringing in products, allowing us to move in that direction. Another thing that we are heavily focusing on starting this quarter is to improve our operating results. Our goal at WDC is to become a highly efficient company when it comes to our operations. In order to maintain growth with profitability, with good income, we have to improve our operating results relentlessly. And recently we issued an advisory to market. We brought to the team Marcelo Rezende, an operations director, an extremely skilled executive in the telecom and IT industry. He was already a CEO of other companies, and he came to support us and help us better improve our processes and our internal organization with a clear goal of improving WDC as a whole. After all, our very fast growth, our internal infrastructure has to be constantly updated. And a couple of months ago, recently, by the way, we were informed that the administration, the government of the state of Bahia, gave us another authorization to open a new factory with all the tax incentives that we already had in our first factory in Bahia. With that, we intend to improve our manufacturing efficiency as soon as possible. And this is going to be in the greater Salvador area, which has plenty of logistics and also in terms of human resources. So possibly we'll manage to lower some costs in all areas. So we don't have a deadline. The date is to be set, but this process is ongoing, which is good news. Good news to share about what's next. I guess this is it. This is what we had to say. This is what we had prepared to you. So now I open the floor to the Q&A session. Rafael, can you help us, please?
Vanderlei, the first question comes from Christian Faria from BBA, Itaú BBA, and in fact, he asks two questions. The first one, in relation to the sales performance of telecom, you talked about the decrease in demand and the difficulty to obtain materials. So he would like to better understand these two factors and whether this is a more transient situation or should it remain over the next few quarters? Okay, I'm going to answer this one. And then afterwards, Rafael will be asking the second one. Christian, thank you very much for the question. In fact, at the beginning of the quarter, we had some difficulty regarding the supply of these materials. There were delays in delivery, and then little by little, it went back to normal. And as I said on my last slide of my presentation, everything is going well in the sense of going towards a more regular supply of products over the next few months. So it is going in the right direction. And I really believe that we have already seen the worst of it. So we bought a lot. A part of that has already been embarked. And because of that, I believe that the situation will be gradually better. And the manufacturers also, they raise their prices. And because of that, we have to transfer this increase to the market. And of course, this is always a very challenging situation because transferring these increases, everybody understands this situation, the whole world is living the same situation, but it always brings pressure to all the conclusions of the orders. And when I was talking more specifically about the telecom scenario, we saw in the second quarter, we saw an increase in inventories, especially fiber optics modems on the part of ISPs, because they were afraid of the shortage of product. And this is the reason why they bought in advance. And in the case of telecommunications, when you talk about telecoms, it's a very wide market. And we see this deceleration mainly focused on what we mention as the number of new subscribers in the ISPs. Maybe this is just a one-off situation only this quarter. We do not have a clear picture of that yet. But what we saw was that some of the large operators, Oi, Claro, Vivo, they became extremely aggressive in the last few months. And they are having a much stronger competition in terms of the number of subscribers. And I would say that this scenario is not very clear yet, but we will be having a fourth quarter that will bring us more clarity about the situation and what is going on. What we see is that the ISPs are growing the number of the ones that are growing the number of subscribers. They are doing that by means of M&As. So we do not have a clear picture yet about the real trend. And we are monitoring the market and we're preparing ourselves. And the line that I mentioned of our own brand is very strategic because it's cheaper, the Easy for Link brand. It has a better and bigger penetration in smaller ISPs, and this is a market where we do not have a very big stronghold yet. And this should be a very good tool for us to grow in this period. And what is the next question, Rafael? Vanderlei, thank you. And the other one has to do with margin, and maybe André will be answering this one. In relation to the strong performance of the gross margin in the corporate segment, even with a robust growth in solar, and that has some impact on the mix, should we expect margins to stabilize at these levels in spite of the growth perspective of solar in the future? And also, he asks the following: what about the increase in the interest rate impacts the strategy of the company? André, maybe you could answer this. Our solar BU delivers even more than we expected. And we started operations in January 2020, and we continue to have high growth percentages. And we have been delivering this growth curve, and we believe that it will continue to bring about better margins for solar BU, considering the scale and the efficiency and the better utilization of the installed capacity that we have and that we designed at the beginning. And together with corporate, we also have the good news of the pandemic coming to an end or mitigating. And we have the professional audio and video division, which is a BU, in fact, that depends basically on agglomeration of people, lots of products having to do with music shows and large events, and with a huge attendance, churches. And these segments are returning, and the companies are again consuming these products. And this segment brings about very good margins as well. We have very good margins in these segments. And our expectation is that we will continue to grow in the next few quarters in these two segments, in fact, in these two BUs. Of course, you always have the mix effect. We know that the solar BU works in terms of market with a smaller margin than the other segments of WDC. And we have always mentioned this to you in terms of the reduction of the overall percentages of margin as solar gains more space. And Vanderlei has just shown you a chart. And so our expectation is that we will continue to give you good news in these two segments. And the other question, correct me if I'm wrong, Rafael, the other question was about the increase in the cost of money and the increase in the Selic rate and the pricings of TAS. We always say that our TAS is not a financial product. Our TAS is an operational product. It is a service. It is a rental. And this rental has to do with the value of each monthly installment that each client will have to pay according to the contract, according to the agreement. And we usually work up with the internal rate of return, which is much higher than the interest rate. very much so, because of all the benefits that exist in this modality that is offered by WTC, that is to say, TAS, and all the benefits that we have already shown you, the combo that involve the TAS solution. And we understand that the margin that we obtain and the investment rate of return of TAS, which is already 3 times, it's already threefold the Selic rate. We understand that in spite of this increase in the Selic rate from 2 percentage points per year to currently around 7, and it will close the year with a projection of, well, we don't know whether it's going to be 10 or something around 10. We understand that at this level, the internal rate of return continues to be very attractive, and we intend to continue with our pricing strategy. Of course, we always pay attention to whatever happens, and we think about scenarios and the market perspectives vis-a-vis the interest rates, but this could change. And we have a live management and a very careful management of all that. And we pay attention to any needs of adjustments in our pricing or fine-tuning, but so far we have not seen anything in this regard. Thank you very much, André.
We have questions from Thales with One Asset and also Joaquim Humberto. They want to know about the restriction of offer 476. As you all know, we had this offer 476 in July, which has restricted sales efforts limited for institutional investors. And it happened in late August, early September, if I'm not mistaken. It has to do with blocking or impeding this negotiation for individuals. So he wants to know about this and if there is an intention to have access for all. Vanderlei, would you like to answer? I can do that, yes. Look, we are keeping our eyes to this problem. I would just like to say that this was not a problem caused by ourselves. We had nothing to do with that, actually. We regret that this happened and that CVM made this decision. And it's true, we are discussing internal alternatives to see what we can do in order to unleash this. We haven't come to a solution yet, but we're keeping our eyes open. We are fully engaged, trying to find a solution as soon as possible for this kind of block that was brought to individual investors. But it's not so easy, not so simple. And we're doing everything in our power in order to solve this. As soon as we come to a solution, we'll let you know. We'll make an advisory to the market and do everything we can to come to a solution. Thank you, Vanderlei.
Marcos Alves Oliveira asks how the company could benefit from the implementation of the G cycle. Cool. I think everybody has followed the auction in which we were very successful regarding 5G. It was the Ministry of Telecommunications and the government considered that it was not the right time to have grants and that they could allow the companies to invest in the network, in the grid. And the 5G cycle is a telecommunications technology that brings about a whole range of benefits for all the subscribers and users, and one of them is the increase in the speed. And the other one is the reduction in latency or delays in communication. You all know very well what latency means, and nobody says anything about how to solve the problem. And we know that there is only one way to solve the problem, which is to have the content near the subscriber. This means data centers and storage and servers close to the subscriber's network. And this means mini data centers. So WDC already has an expertise in the construction of data centers. We have already built dozens of data centers for the ISPs, and with this partnership with Huawei, when I talked about our partnership with Huawei, I didn't mention that one of the things that Huawei visualized by doing this new division was exactly the growing need that we will be seeing on the part of all the operators in terms of building mini data centers. And even more than that, these mini data centers will have to consume less energy. They have to be as zero carbon as possible for the implementation. So we believe that we are going to benefit from this implementation in many different ways. The first one is being partners of Huawei in order to deliver mini data centers in the TAS model to the operators that want it. And the other thing is that the towers themselves, the cellular telephone and the cellular antennas, mainly those who are still in 4G, and that will be in highways and in the more rural areas of the country, they tend to have clean energy as well, because there is room for that, because they have room around the towers to build, for instance, a mini solar energy unit. So this is one of the bets that we're making hand in hand with Huawei. Thank God I'm not alone in this endeavor. I'm together with one of the biggest technology suppliers in the whole world in order to offer this kind of infrastructure in the G cycle. So we are not going to participate directly in the sale of the antenna for the 5G. This will be in the hands of the manufacturers, Huawei, Nokia, and Ericsson mainly. But we have everything surrounding the infrastructure of 5G, for which we do have solutions, and we are now associated to this heavyweight partner. So this is our vision of how we benefit from the 5G cycle.
Another question about the partnership. They want to know if the partner with Huawei Digital Power will allow us to provide to big telecom companies. Could you comment on that as well, please? This is our sales question. Huawei has this policy. There are some accounts that they deal with directly. Chances are that Huawei's first option in these big companies, like big operators, like big data centers, not precisely. We are going to contact them ourselves. These are huge electric energy consumers. They need the technology. Big accounts like Tivit and all these mega data centers. Now, when it comes to operators, we can see that WDC is the ideal partner when it comes to OPEX. So, in case the customer, the client, be it a big operator that is served directly by Huawei, then we have our offer in OPEX, and they bet heavily on this joint strategy. When it's only sales, naturally we are out. There is no room for us to join with them. Thank you, Vanderlei.
Karina Martin from Citi. Could you talk about the current trends of each one of the segments, Now for the fourth quarter, especially telecom, and I think we have already talked about telecom, so maybe you could talk about solar and the enterprise BU in order to add to what was already said. And another question has to do with TAS. She asks, when do we expect to finish the duration of the TAS contracts? Okay, great. Karina. Karina, very good questions. As I said before, we have already talked about the telecommunications perspective. And the deceleration that I referred to has to do with a small part of telecommunications, and all the part having to do with mini data centers, and the remainder of the infrastructure which is needed continues to be the same. Maybe the number of subscribers will have a reduction, or we'll see a reduction in the next few months. And in the case of enterprise, we have to keep in mind the following. The post-pandemic scenario has been showing us that some segments are coming back with full force. And the biggest suffering that we had at the beginning of the pandemic had to do with events and auditoriums and theaters and corporate meeting rooms, offices in general, and for whom we sold Wi-Fi and all the network part and the professional audio and video equipment and corporate telephony. So all these areas are bouncing back. So the outlook is good. And André even referred to this. Margins are healthier. And in the fourth quarter, we don't see any kind of problem regarding demand. In solar, well, as you all know, we have an exponential growth in solar. And we also saw that with the major acquisition that happened by Brookfield, and the prices in the market are healthier, and this improves margins for everybody involved. So we do have a very good inventory of solar equipment, and our partnership with Huawei in terms of solar inverters has opened for us the possibility of bigger plants. So the outlook is very good for this unit as well. And also you have the lithium batteries. Part of the solar business has to do with storage, energy storage. And what we see is that there will be a very big demand, even on the part of operators and in the part of ISPs, in order to exchange the batteries that they have. Stationary batteries, as they are called, and they will have to be replaced by lithium batteries. So the telecommunications market is extremely wide, and there will be a cross-selling of products with solar products in this segment. Not to mention that solar also has to do with overlaps with the corporate market. And we already see, for instance, an interaction on the part of companies that sold only security equipment and that now are interested in increasing and expanding their portfolio and starting to work with solar as well. So this is our outlook, not only for the fourth quarter, but also for the other ones as well. In 2022, well, I would like to remind you that we are in Brazil and everything is possible. But our view is that the possibility or the outlook is very good for the other segments.
Thank you, Vanderlei. Next question, Floriano Siqueira. He wants to know if in the acquisitions you mentioned on the last slide, he wants to know if you're going to use the company's cash or if we are going to fund these operations. André, can you answer the question? You are the owner of the cash. Tell him all about it. Floriano. Well, like Vanderlei said before, we're still considering and assessing the governance steps, assessing the M&A pipeline. As soon as we have better visibility, by the way, we are talking to companies of different sizes and different segments, like Vanderlei said, and we are always considering the best design on how to optimize any possible transaction. It could be via cash, or we might decide to considering the high or low level of leverage at the company. If we understand that this will bring more value to shareholders. By the way, at the company, we also have this flexibility. You also ask when we should go back to market. We don't have any plans yet, and we are heavily focused on delivering our business plan and being in-house, working on our opportunities to develop our business, and also assessing the best opportunities for acquisitions. So basically, that's what we're doing. We have flexibility to go for any of the alternatives that you mentioned, Floriano.
I believe this is the last question that we have. This is Rogério Silva. And could concrete ceiling make electric energy? And do they compete with what you provide in your company, the product sold by Eternit? Well, there are so many competitors and many potential competitors. And what we see is that this product so far has a low yield performance so far. Today, the solar plates that we have an extremely high yield. Due to the concentration of the silicium, with the same light intensity, they can generate a much higher power. And this is fantastic because you require a smaller area. That is to say, you can use a smaller area in order to generate more energy. So what we have to do, we have to incessantly look for the increase in this productivity or yield of the solar plates. I don't know whether you are familiar with that, but there are some that are double phase, which means that you generate energy directly with the direct sunlight, and then you paint the floor in order to reflect the energy, and the lower part or the under part also generates energy, because this is an ongoing search for efficiency. Less square meters generating more power. Unfortunately, as far as we understand, the kind of material that you mentioned, the concrete material, does not have the same. And we know that in the United States, this kind of initiative existed, but so far we do not see the energy efficiency and at a reasonable cost. Of course, there are competitors, but this one is not really a big competitor. I would say that it is one of the smaller competitors.
We have a last question about the potential of Easy for Link. What do you envisage for the future? There was a question about this. Great, sure. Like I said before during my presentation, our outlook is really great for Easy for Link. It started with products. In the past, we already had this idea, like products like connectors, cleaning kits, things along those lines. They were accessories to build a network. And now we had an important leap because now we're becoming a strategic competitor with a fiber modem, both a fiber modem with or without Wi-Fi connection, and fiber optics cable under our brand. So as we can see, we already have 2.3% of our total sales, and this is expected to increase over the coming quarters. In addition, the portfolio will also expand. So we already have a pipeline to launch new products in this line. Wi-Fi routers, 6 for instance. This is one of the trends that we'll see next year. Another thing that we usually talk about, and we talk a lot about it during our IPO, and we try to have this education to the market. Telecom somehow will stop growing based on the number of subscribers and will begin to grow via technology renewal. So Easy for Link also comes to meet this demand, to meet this strategy. Of providing or offering a line in which we'll be involved in the design of the product, so it really meets the needs in terms of price, in terms of technical specs that Brazil mostly needs. So this is our outlook. We consider this line to be with very high prospects. We have an area specific to address this, dedicated to this, and we're just about to approve this product with several providers. They are willing to run tests and to run stress tests in terms of features, etc. So that's a good view for the future. We believe this is going to be a very good driving force at WDC. Great. Thank you, Vanderlei.
Well, with that, we end the call about the results of the third quarter of 2021. And in case you do have doubts or questions, please contact our investor relations area. Thank you very much and have a very good afternoon. Thank you.